Hello everyone and welcome back to Explain the Charts. Today is May 1st, 2026, and we are looking at a pivotal moment for Apple Incorporated, ticker symbol Apple. The market is currently reacting to a whirlwind of news, including a massive Q2 earnings beat and a major leadership transition announcement. Apple reported revenue growth of 17%, driven largely by an extraordinary demand for the iPhone 17. Earnings per share came in at $2.01, significantly topping the analyst estimate of $1.94. Perhaps the most shocking data point was the 28% jump in sales within China, a region that has recently been a point of concern for investors. However, it's not all clear skies, as the company warned of an extended memory crunch that could drive up production costs for Macs and iPhones. Furthermore, the era of Tim Cook is drawing to a close, with John Ternus set to take the helm in September 2026. Investors are currently weighing these strong financial results against the uncertainty of a new CEO and supply chain headwinds. As we look at the charts, we need to see how these fundamentals are translating into price action. Looking at the one-day chart over the last year, we can see a remarkably resilient uptrend that began in early 2025. After hitting lows near the $170 range in April 2025, the stock has been on a consistent tear higher. Notice the massive volume spikes throughout late 2025, which signaled strong institutional accumulation. We saw a major breakout above the $250 level back in late September 2025, which has since turned into rock-solid support. Throughout early 2026, the stock consolidated between $255 and $275, building a base for the current move. The recent price action shows Apple closing April 30th at $271.35, right before the earnings explosion. In pre-market trading today, the stock is already testing the $280 mark, which represents a significant psychological level. This daily trend is clearly bullish, but we are approaching overbought territory on many momentum oscillators. The long-term support remains at $250, while $270 is the immediate floor we want to see hold on any pullbacks. Resistance is thin above $280, with some analysts now pointing toward a $300 price target. Switching over to the one-hour chart to see the lead-up to yesterday's earnings call, we can observe a period of intense consolidation throughout the final weeks of April 2026. Price was tightly coiled between $266 and $273, with traders hesitant to take large positions before the data release. The news of the 17% revenue increase acted as a catalyst to break this range with significant force. During the last few hours of trading on April 30th, we saw a steady climb as rumors of the strong China sales began to circulate. Note the high-volume hourly candles that occurred as the market digested the EPS beat of $2.01. This hourly time frame shows us that the $270 level has transitioned from a resistance zone into an active support zone. If the stock dips back into the $272 area, it could represent a prime entry point for short-term bulls. We should also look at the V-shaped recovery that occurred following the dip on April 21st. That reversal proved that buyers are still very aggressive at defending the moving averages. Now, let's zoom in on the 15-minute chart to witness the exact moment the earnings hit the wire. At the 21:19 Universal Time coordinated mark on April 30th, the stock price gapped up from $269 to nearly $280 in a single candle. This 3.9% jump was accompanied by massive transaction counts as algorithms and retail traders scrambled to buy. The peak in extended hours hit $284.89 before settling back down into a consolidation pattern around $281. This high-frequency data shows us that there is a fair value gap between $274 and $279 that hasn't been tested yet. Often, these gaps act as magnets, and we might see a quick dip to fill that range before the next leg up. The 15-minute trend shows a slight cooling off toward the end of the night, which is typical after such a vertical move. Watching the $278 level during today's session will be critical for day traders. If $278 holds, the momentum is likely to carry us toward new all-time highs very quickly. However, if we lose $276, we might see a deeper retracement toward the previous close of $271. Let's step back to the daily chart to discuss the broader implications of these moves. The news of Tim Cook stepping down is a sell the news risk for some, but the strong fundamentals are currently masking that fear. John Ternus is a known quantity within Apple, so the leadership transition might be smoother than the market initially feared. The biggest threat on this chart is actually the supply chain warning regarding memory costs. If those costs eat into the Q3 margins, the current bullish run might face a sharp reversal in the summer. From a technical perspective, the stock is currently trading above all major EMA lines, which is a sign of extreme strength. The RSI on the daily chart is pushing towards 75, suggesting that we might see some sideways action before another breakout. I am bullish in the short term as long as we stay above $275, targeting the $288 to $292 zone. Long term, the ecosystem strength and China's recovery make a compelling case for a $300 valuation by late 2026. Bearish sentiment would only trigger if we see a daily close below the $260 level on high volume. To recap our analysis, keep your eyes on these key price levels for Apple. Immediate support sits at $278 and $274, with a primary floor at $270. Resistance is currently being tested at $282, with the next major ceiling at $285 and $300. I believe there is a 70% likelihood that the stock remains above $275 for the next week given the earnings strength. There is a 30% chance we see a gap fill down to $271 if the market as a whole faces a tech sell-off. Look for volume to remain high today. If volume dies down while price stalls at $280, it might be a sign of a local top. The upcoming transition to John Ternus will be a narrative we monitor closely as we approach September. For now, the iPhone 17's extraordinary demand is the primary driver for this bullish momentum. Always pay attention to news out of the memory chip sector, as it could be the black swan for Apple's margins. Remember to use stop losses and manage your risk, especially during post-earnings volatility. Thank you for watching this in-depth analysis on Explain the Charts. Please note that this video is for educational and informational purposes only and does not constitute financial advice. Trading stocks involves significant risk, and you should always conduct your own research or consult with a licensed professional before making investment decisions. If you found this breakdown helpful, please like, subscribe, and hit the notification bell for more chart analysis. We will continue to track AAPL's progress as the new era of leadership begins. See you in the next video and happy trading!